Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is October 22nd, 2019, and it's a Tuesday. So let's get started. Let's open up the charts right here. You know, I'm not sure yet. I see the dollar shooting up in price this morning, and it's really went up quite a lot, and 97.48 right now. And it's not up an enormous amount, but I'm really wondering what's causing this morning yet. Maybe it's something to do with Europe, but I haven't checked into it yet. I'm going to check into it. That's kind of a big story, but I want to talk about this right here. These are the last days now, what we're having right now, of normalcy in the markets. I think volatility's coming like you've never seen before. And, a lot of it's going to start in these debt markets and stuff, And he's talking about in this article here. He says, it'll start with a small wobble in the markets. Perhaps a small hint that anticipated global recession isn't, or maybe it won't be so bad. Or further acknowledgement that central banks' experimental monetary policy has not worked. And they won't continue to slash rates and institute quantitative easing on every chill economic wind. Or maybe it'll start with just a trickle of investors looking to sell corporate debt, discovering just how illiquid the market is, and panicking, causing a real massive avalanche of bond misery. We're moving toward this. It's coming. You know how much triple B rated debt's out there, and it's invested in as investor grade that could be downgraded, and all of a sudden the bottom would be out from underneath that, because where the pricing is on that right now and where the pricing could be is a huge gap where it could fall in price, a tremendous, and this, all these funds, and stuff that people have invested in, all this pursuit of wealth, and pursuit of yield. They've been looking for yield so crazy. They've been buying into things that they shouldn't be buying into, It says if and when these things happen, the bond market holders will be left holding massive losses on low-yielding assets. Will it trigger a crisis? He asks a question mark. Most of the risk that caused the 2008 crisis was held by banks. Over the past 10 years, the bulk of that risk has been transferred out of the banks into fund management, real money insurance, and pension savings. The pensions are going to get hit huge, in this next crisis, I believe. And I think it's getting ready to start to unfold. Let's take a look now at the silver price today. See what's going on. This is the only real non-counterparty things that you can buy, is mostly gold and silver and cryptos, but mostly the gold and silver market. It's the tangible thing that we can hold in our hands that we want to buy, right? And it's got no counterparty risk. Do people out there understand how important that is, to have no counterparty risk in this system that's ready to roll over? All of your paper assets you have out there, including your money in the bank, has counterparty risk, and the bank can actually you can wake up some morning, then sleep that night, wake up the next morning, and all of a sudden the bank has done a haircut, what's called a haircut to you, where they do a bail-in, where they actually take the depositor's money, and they don't give it to you, they take a percentage off of it. Because it's written in the law now that money, once you deposit it in the bank, doesn't really belong to you anymore. It belongs to the bank. They can do with what they want. I know this sounds absolutely absurd, ridiculous. It doesn't sound like it could be true. You go in, you take, and you make a deposit in the bank of hard work money that you've worked hard for, and now it doesn't belong to you anymore. It belongs to the bank, and they can do what they want with it. They can invest it in these money market accounts. They can invest it in these Italian bonds, Greek bonds. And when the whole thing turns over, they don't have to give you your money back. They can withhold a percentage of your money, and they call it a bail-in. And this is written into law. Listen, guys, this is getting crazy. But it's true. This is very true. They can do this. Most people don't understand that the bank can do that with your money. They think it's my money. It's not your money. It's the bank's money. Once you give it to the bank, it's their money. It's not your money anymore. Most people don't know that. Maybe I'm waking a few people up out there in the audience right now, you know. Anyway, here's the silver price today. It's up 5 cents so far, $17.57. Let's take a look at gold. Gold's at $14.88. It's up $3.90 so far. It's going up at the moment, but it's been trading in a very tight, narrow range. Could it be getting ready for a breakout? Possibly to the upside, or... I mean, there is an alternative. There is a downside out there. Let's take a look at cryptocurrency today and see what it's doing. We're looking at 223.5 billion with a Bitcoin dominance of 66.5%. Cryptocurrency has been trending upwards, but ever so slowly over the past little while, the last day or so. Let's take a look at the Dow Jones this morning. We're looking at the Dow Jones being down, 11 points. It's really not going anywhere today, the Dow. You know, not up or down. Look, it just went above the line now. Now it's 6 points above the line. Below the line and above the line. Next it'll be below the line. It's just marching around the line today. It's going basically sideways, the Dow is. Let's take a look at crude oil today. Now, to my surprise, crude oil is up 85 cents on the day. It's at $54.16. It's up 1.59%. That's going to make the people that are worried about crude oil, and are, believe me, within the financial system, they really want crude oil prices up higher. They, is the powers that be, want crude oil prices higher. And so they like to see it go up 85 cents on the day, you know, and that's quite a little increase. It's 1.59%. Well, let's take a look at it on the 5-day chart and see what it looks like there. We can see it shooting up, crude oil price. But it's not significant. It's not a significant rise in price. Let's take a look at U.S. Treasuries today, see what they're doing. What we're seeing in treasuries today is we're seeing the yields falling on the long end of the yield curve, but not a significant move. 2.4, around 2.4 basis points on the 10-year down, and 2.8 on the U.S. 30-year. We're looking at 2.25 on the 30-year and 1.76 on the U.S. 10-year. If we look at the short end of the yield curve, we do see that the 3-month is the only one. It's the only exception, and we see the yields rising on the U.S. three month. We're only looking at 1/3 of 1 basis point though, so it's very insignificant. Let's take a look now at the U.S. dollar index, and this is probably the big story of the day: the fact that the dollar is starting to rise a little bit. I don't see this continuing, to tell you the truth. I'm not sure yet what's causing the dollar to go up, and I don't see it continuing. And when the dollar starts, I think very possibly later in the day. Well, first off, I better check in and find out exactly why it's rising in the first place. But if it does drop off later in the day, and it very well could, then we should see gold and silver start to go up a little bit again, you know. Because, you know, these two are the antithesis of each other. I guess is I'm using the right word, antithesis. Gold goes up, the dollar goes down. Gold goes down, the dollar goes up. This is why they couldn't let the gold price go too high for all those years. They had to manipulate the price of gold and silver down is to maintain strength in the dollar. Because if the gold and silver prices went too high, then the dollar would have been a exhibit number one, the dollar's weakness, to the dollar's weakness, you know. Listen, thank you guys for listening to this report. Please give me a thumbs up. I really appreciate that. And we'll catch you guys in the very next show. Bye-bye.